follow suit? We'll find out. And U.S. markets close in about 2 hours. Let's get a check on trading. Julie's got that for us.
I do. I'm doing double duty. So yes, we have stocks back around the highs of the session after an earlier dip here. It is a relatively low volume week. It's a spring break here in New York City. Of course, trading is closed on Friday as well. So tends to be a little bit of a holiday week feeling for stocks. But of course, this has been the case, right? Over the past month or so, we've had this drift in U.S. markets. Take a look here at the Bloomberg. We simply have a chart since the election of the S&P 500 in white, the NASDAQ in blue, the Dow in yellow, and the wall here kind of happened on March 1st. That's when all three major averages, the last time all three major averages hit simultaneous records on a closing basis, and then we have seen this sideways movement since then. The biggest group in the S&P 500, or one of the biggest groups, I should say, the financials have been certainly a part of that. And as we go into bank earnings season, which is beginning later this week, it's worth taking a look at what the BKX, the KBW Bank Index, has done specifically since March 1st. As you can see, it's down by nearly 9%. Betsy Gracick, the influential bank analyst over at Morgan Stanley, out with a note today saying that there is a bumpy road ahead for first quarter big bank earnings. So that appears to be further weighing on sentiment for this particular sector. But counterbalancing that is what's going on in oil stocks. And that's because oil itself is trading higher. Crude oil up by about 1.4% off its highs of the day, but still gaining. ExxonMobil and Chevron among the oil majors that are higher. There is some supply constraints once again in Libya, so that is prompting this long rally that we have now seen in oil prices and in the rally that we are also seeing in these oil stocks. Also making headlines today once again is Jeff Gundlach, the well-known head of Double Line Capital. He spoke to the Financial Times in an interview and said the reflation trade will dissipate as consumer price inflation goes down in the next few months. Now, this is a chart that he actually referred to last week that we brought up, where he said he prefers non-U.S. stocks, and indeed, this year we have seen an outperformance among non-U.S. stocks. The MSCI World Index here in white, the S&P 500 is in yellow, but then you have the MSCI EU Index